See, there are like 4 core things I think you should keep in mind. See, most of us, when we think of investing, we think only of equities, and what we like to talk about in parties is that, I found this stock and look, it's gone up 5 times. And the one I told you last year, see, it's been a 20 bagger. So if your objective is just some fun in life, that is fine. But if your objective is that I must optimize returns on my investment, the first thing you have to look at is asset allocation. So if you look at the first page of any investment book, it says, and these are like all research studies will show that between 85 to 90% of your returns are determined by how you allocate your assets. So whether it is like, if you look at 2019, the stock market in India went up 7%, G6 went up, about 16, 17%, gold went up 20 odd percent. So, but, often investors or even professional fund managers will look at only equity as an asset class. And related to that is that your field is not just India. So this I was talking about the asset classes within India. So the number 2 thing is that you must look at global diversification, because India is less than 3% of the world's market capitalization. I think it's around 2.5 or so. So why must you restrict yourself to this single market? And as I said, with the Asian crisis example, it can be highly risky. So that is the global diversification has to be there. Global diversification, again, does not mean just going and buying a NASDAQ ETF or thinking that you can trade the NASDAQ. This year, because a lot of people were sitting at home, they started doing that, and it was a good time to be doing that, in the sense that, most of them would have made good returns. But trust me, that is not a replicable strategy. Global means global. If you are just adding US, that means instead of one country, you have 2 countries. It's still only equities. That is not good enough diversification. If you look at last year, for instance, to 2020, the number 1 performing market was Vietnam. The next was the Korea Tech Index. Next was China. 2019, number 1 was Russia. Then was Brazil. Then was Denmark. Whereas in the first half of 2020, Russia and Brazil were right down there. If you look at 2018, almost all markets were down in the world, but there were a few in the Middle East that were up, Bahrain, Saudi Arabia, etc. So, the leadership changes from year to year, even, quarter to quarter. So if you're just in 1 or 2 markets, that is not good enough diversification, and it still leaves you exposed to risks. The third is your portfolio, that, how is your portfolio construction? You must know that of all your net worth, how much is where, how much is in real estate, how much is in equity, how much is in debt, how much is this in India, overseas. So if you're just buying, somebody gives you a hot tip, you buy that, then you buy another one, and before you know it, you have like 5 banks and NBFCs, you have 4 FMCG stocks, and you have like 3 other stocks, which on paper you might even have 12 or 15 stocks, but they're all in certain industries which move together. So you don't even have diversification to the level of 15. And the 4th and the most important is risk management. This is the holy grail of investing. Avoid the big mistake, avoid the big loss. If you look at March 2020, February, March, a lot of professional fund managers, let alone investors, people who are managing mutual funds or PMSs, their investors were down 30-35%. Once you are down from 100 to 65 or 70, it takes a 50% move to even break even. So in markets everywhere, your first mantra has to be risk management. I've spoken of it as the last one, but that's really critical, that avoid the big mistakes so that you live to fight another day, you live to make more money another day.